All right, it looks like we are getting a lot of people logged on here, and I don't want to take up too much of Jim's time, so I'll just go ahead and get us started. Again, thank you everyone for joining JMT Consulting today for our webinar over long-term financial planning with Jim Croft. My name is Megan Mendiola, and I am a regional marketing coordinator here at JMT Consulting. I'll be helping facilitate the webinar today, helping manage questions and other things like that. So I'll go ahead and say a few words of introduction here and then introduce Jim to you all and then turn it over to him to get us started. So this webinar is sponsored by JMT Consulting. We are an ERP and financial management solutions consulting firm. We have over 28 years of experience specializing in nonprofits. We partner with a large variety of software partners to find the best solution for your nonprofit. So just a few housekeeping notes before we get started here. If you do have any questions during the webinar today, please go ahead and submit them into the Q&A section on your control panel. We'll get to as many of those as we can throughout the webinar today, and also save some time for Q&A at the end. So please just go ahead and submit any questions you have into the Q&A portion of your control panel as you think of them. Also, just a reminder that today's webinar recording and slides will be emailed to you within 24 hours following the conclusion of today's webinar. Now, I wanted to introduce you all to Jim Croft. Jim serves as the Academic Director for Nonprofit Finance in the Kellogg School of Management's Center for Nonprofit Management at Northwestern University. And he is a faculty member at the university's School of Professional Studies. He teaches as well in the MBA program at the University of Nebraska. Dr. Croft also acts as the management consultant for several nonprofit organizations. So Jim, I will go ahead and turn it over to you now to get us started.
Thank you. Thank you very much, Megan. It's a pleasure to be with you today, and I get to talk about a topic that I'm very concerned about and like to share the topic of long-term financial planning. One of the things that we do at Kellogg is to have a number of executive education programs in the Center of Nonprofit Management. So we focus on issues that are relevant to our nonprofit colleagues, not only in Chicago, but throughout the country. And I found that one area that consistently comes back to need more conversation is this idea of planning, especially financial planning. And often we think of financial planning as just the operating budget. But I believe that a good financial plan is much broader than just the 12-month operating budget, and that's what we're going to talk about today. So Megan has given me permission to share some slides, and I'm going to do that right now. And amazingly, they worked. So let's get right into the conversation, and Megan is going to watch the chat box so that if you have questions, you can ask. And if you'd like to interrupt me during the conversation or during the presentation, please do that. Actually, I work better when we talk. And the only thing that, the only downside of the online work, which is also the way I teach my MBA courses, is that you're not live and you can't really see each other. And so let's see if we can, to the best of our ability, pretend that we're all together. Ask questions as we go along. Megan will interpret and I'll attempt to answer. Why do we even talk about long-term financial plans? I think that that's probably where we should start this afternoon. You know, we quite often put together these strategic plans. And I've seen numerous strategic plans over my career because, as Megan said, I'm working in academia now, but I spent several years in social service work as a center director and as a finance officer. And then I spent 30 years in cultural work as the executive vice president at the Field Museum in Chicago. And I have been through my share of strategic plans. But the one thing that I always feel is a little weak when it comes to strategic planning is a good definition of how we're going to pay for it. So the financial plan, the long-term financial plan, is one way that we can identify the resources that we need in order to make the strategic plan successful. And ultimately, we should be doing strategic plans for one reason. We want to go somewhere, and we need to get there through this planning process, but it's going to take some financial resources to accomplish that. In addition to helping with the resources for our strategic plan, the long-term financial plan can help us to identify programs and service growth that we might want to engage in to meet our mission. And ultimately, as everyone on this webinar will agree, our ultimate goal is mission accomplishment. We're not doing this to maximize wealth for stockholders, but we're doing this to fulfill a mission that our organization is all about. So the long-term financial plan helps us to identify those programs and those growth areas so that we can do a better job of meeting our mission. Another reason I think the long-term financial plan is helpful is because it helps us to actually prepare our operating budgets in the future, because we are going to see through this planning process what types of impact we might expect 2 or 3 years down the way. So we're not just doing something today, but we're putting together a plan that's going to help us to identify how the organization can be sustainable in the future. It also helps us to understand what our key assets are and to identify them. And perhaps the most important part of long-term financial planning, in my estimation, because I was a practitioner and I know what this is all about, and it all is about cash. And we want to be sure that we have the cash available to do the mission that we were created to accomplish. So it helps us to look at all those areas. It also helps us to identify capital structure. So if we're going to do some new capital expenditures, how are we going to pay for them? And through the long-term financial plan, we can identify many of those areas. Now, how do we go about the planning process? Well, I believe that there's 2 important considerations that we have to focus on. 1 is internal factors, and 2 is external factors. I'm sure you're saying, well, that's really revolutionary. I knew that. Well, let's just talk about that a little more for just a moment. What are the internal factors? Well, the number 1 internal factor that we have to consider when we're doing long-term financial plans is the mission. What is our mission? Why are we here in the first place? What are we trying to accomplish? Who are we serving? And we need to have a good foundation, foundational understanding of what our mission is. And then we need to start to look at the various resources that the organization has that we can incorporate in this plan to accomplish the mission. Financial resources, physical resources, human resources. And then we also need to really understand in a very substantive way what our historical trends have been in the past. And I defined historical trends as where have we come from in terms of revenue composition? What's been our expense composition? It's good to know those things. It's good to know what the past is, because that's going to help us to at least get a better understanding of where we are today, because this is the point of departure. Where we are today is the point of departure if we're going to move to a strategic objective sometime in the future. We also need to understand staff compensation. Most nonprofit organizations that I'm familiar with, that I've consulted with, and also have interacted with through our work at the Center for Nonprofit Management, I found that the majority of the expenses that a nonprofit institution incurs is staff compensation, and I define that as direct pay as well as benefits. So we really need to get a good handle on what we are paying our staff in order to do the work to accomplish the mission. And also program costs are important. I think this is one area that I believe has been maybe somewhat of a deficiency in some of the individuals I've worked with, is really getting a good grasp of what programs cost. Now I'm thrilled, and I'm sure that that we could have a debate on this, but I'm thrilled with the fact that the new accounting standards that came out from the Financial Accounting Standards Board in ASU 2016-14 now requires us to do the statement of functional expenses. I know it's a little bit of a pain sometimes to do all those allocations, but what it does do is gives us a reason to really start to think about what our programs are costing, and then to work out a logical way of allocating cost to get a better sense of what programs cost. I think once we do that, then we can start to think about how much are we putting into this program from general resources? Does certain programs have revenue streams attached to them? If they do, we can see if there are situations where we have programs that actually break even or actually have a surplus. But at least we have the information that we need to determine what our programs are costing. It could help us also in making some tough decisions as we move into the future. And we know that we're in some hard times. We just really kind of got our breath after the recession, the big recession, the Great Recession, and now we're dealing with the economic fallout from the pandemic. So we really need this information. Also, management and general costs are important. What's the overhead? And I really don't like that term overhead, but it's the cost of really doing the programs. And I think we have to learn too how to better communicate what it costs us to run our programs, because sometimes donors forget that in order to do a specific program that they may like, there has to be some support behind that program. And then of course, fundraising costs. We always want to be sure our development staff has good information to understand how we're doing from an efficiency perspective with fundraising. External factors I've defined as understanding what's happening outside, the market trends, the economic trends, funding sources. I mean, let's face it, in the nonprofit world, we are in a very competitive environment, the philanthropic marketplace. No matter how wonderful your community is in giving to nonprofit organizations, and I happen to live in one of the best philanthropic cities in the country. Chicago is a superb city in terms of being concerned about giving philanthropically, but it is a finite source. And so as we go out, universities, hospitals, cultural institutions, and community-based organizations, we're competing for the same dollar. And so we really need to understand what that's all about. And then the demographics are important. Where are the people we are trying to serve, and how are we doing it? And has things changed that would require some modifications to our mission or our delivery of service? Relationships with suppliers, and we also have to be concerned about political, environmental, and economic regulations, because in one way or another, they're going to affect us. And so those things must be understood. So what I'm trying to say here is a good financial plan has to really look inside, but also outside. And how do we do that? Well, I think the good old standard SWOT analysis is still alive and well. Now, I've heard some management people say that you should scrap the SWOT analysis because it's a passé, it's old. Well, so am I, so don't scrap me. But I think it still applies to what we're trying to do. And as I think about the SWOT analysis, and just in case anyone hasn't really become familiar with it, it's strengths, weaknesses, opportunities, and threats. I think you can divide that into two categories, the internal and the external categories, or factors, as I've put on the screen. So what are our strengths and our weaknesses? That's really what we are about as an organization. Where are we strong? Where can we really make an impact in the community to serve the mission that we're set out to accomplish? What are our weaknesses? And if anyone would tell me that your organization doesn't have some weaknesses, my response would be, look again. Because we all have some weaknesses. And so our job as leaders is to figure out how to shore up those weaknesses and turn them into strengths, or at least let them not be quite as weak, so that we have good foundations to build our mission accomplishment on. Then you've got the external factors, the opportunities and the threats. Where can we actually make an inroad in the community to serve more effectively? So what are those opportunities? And what threats out there would prevent us from being as effective as we want to be in accomplishing our mission? Now,
Jim, we just had a question come through.
yes,
I'd love to
thank
read
you.
it to you. Someone just asked if there's any suggestions that you have for maybe uncovering internal weaknesses in your company that may not be just immediately evident, maybe to the leadership team. Do you have any suggestions for that?
Well, yes, that's a hard question, by the way. I thought I said no hard questions, Megan. Uh, there's no easy answer to that question. It's going to take a lot of hard work, really looking in and basically uncovering, maybe pulling the rug back, as they would say, to really see what's going on in the mechanics of the organization. Now, there's something that that I have found very helpful, and I started years ago studying the open systems model, which I think is a superb analytical tool. And one theory that I found especially helpful was created back in the mid 70s, I believe it was, by a team of researchers by the name of Nadler Tushman. And they really talk about the congruence of an organization in order to make the outputs of the organization successful. And so basically what they have suggested is we really need to look at our inputs, and that goes from everything that I've already mentioned, you know, the resources that we have, the environment, our strategies and so forth. And then what are we trying to accomplish on the outside? What are our outputs? Define those, but then really look hard at the transformation process. So how do we transfer those inputs into outputs? And they suggested that there are 4 basic things that we need to consider. We need to consider the organization. Do we have the right organization in place to make this work? And they even bifurcated organization into 2 components. You're a formal organization, but also look at your informal organization, because sometimes the informal organization can either be a big help or a big hindrance. So you need to understand that. And then they also said, you really need to identify what needs to be accomplished, the tasks that need to be accomplished, and then the individuals within the organization. And ultimately, their thesis is this transformation process must be congruent, or in other words, it's got to fit. And if it fits, then you can take the inputs and successfully transfer them to the outputs. But then there's one last piece that they have said that we really need, and that's a feedback loop. Basically the quality control and so forth. I hope that answers the question, but no easy answer. But if you really want a thrill this summer, I'll go read Nadler Tushman. I think you'll enjoy it. The original study is still in print, and I think it can be helpful. I've used it both academically and I use it in a practical way. And I'm teaching a course right now to nursing students who are working on their doctoral program, and I made them do a open system analysis of their workplace, their clinic or their hospital. So it really does work.
Great, thank you so much, Tim. That was great advice. That perfectly answered the question. So
thank you.
Appreciate it.
Keep them coming. Okay. So I think I was here making a transition into environmental scanning, which really falls right on the heels of this idea of open systems, because we're looking into the environment, and it's so important. You know, just going back to the old SWOT analysis, it's important to understand what we are inside, but we have to understand what's happening outside, and how do we fit into that environment so that we are able to accomplish what we know we should be accomplishing if we're going to meet our mission. So the goal of environmental scanning is to help us to help the decision makers identify what's happening externally before change crystallizes to the point that we've lost maneuverability. It also gives us time to react, and it helps us to better understand where we fit in terms of making a strategic direction and plans for the future. Here's just another way of looking at that. I thought you might be interested in the slide deck that I'm sharing with you. But this is called the Pest Analysis. And this is not talking about those little things that run around at night, but this is political forecasting, economic forecasting, social forecasting, and technical forecasting. And it's very much like the environmental scanning, just a different way of looking at it. But I thought this is a good way of considering this idea of looking out. And as you see on the model, it says we need to anticipate and then react and identify the opportunities and threats. This particular model came to us from the Corporate Financial Institute, and I think it's very helpful to help us to maybe take a different perspective on this whole concept of environmental scanning. So that brings me back to the importance of long-term financial planning. Strengthens our strategic plan. It helps us to establish a long-term resource plan. It helps us in developing a foundation for our current operating budget, but also for operating budgets in the future. And I believe a good long-term plan can make the annual operating budgets going forward a little easier too, because we have to think about a number of issues, not only in this current 12-month period, but in time in the future. And so it does help us to get a better frame on operating budgets, not only today, but in the future. Something else that I think we forget sometimes. This is old pragmatic professor talking now. You know, we have to go out and raise money, and we know that. And most of us have to have a fundraising effort of some sort in our organization. Very few of us can just make money without asking donors to help us. And when we think about going to donors, by doing good long-term financial planning and showing that we can apply some of these basic business principles, we give the impression that we are a well-managed organization. And regardless of the argument, I think most donors want to support an organization that's well managed and is able to most efficiently take their resources and use them to accomplish the mission. Well, when I was a practitioner, especially at the museum a few years ago, and I've been out on my own doing consulting, and I've been teaching, you know, for 30 years, but more actively in the last 5 years. I realized that the long-term financial plans were extremely important, but I also started to focus on something that really helped a lot in what I was doing at the museum, because we were never poor, but we had more that we wanted to do than we could do. And so we had conversations in the executive team about how do we accomplish this, that, or the other. And money always had a way of rearing its, I start to say its ugly head. I kind of like it, but it always kind of surfaced. How are we going to pay for this? And so I developed a very simple financial planning model based on an Excel framework that would put a number of elements or assumptions in the model that we could manipulate and ask, well, what if this or that happened? How would that affect us not only in our current budget, but in years in the future? And so I did that for a number of years at the museum, and I said, you know, this really does help. You know, some of the early models were kind of crude, and I just kept working on them. And I still think that they are important way of managing the long-term planning process. And one of the reasons is that the model simulates the world, the real world. And again, it's just a simulation, but it can give us some information. They're not predictors, but they're indicators of what might happen. So I've continued this idea of modeling the long-term financial plan. And now I've been sharing that concept with some of my clients, and some have really used it effectively. I think all of them have used it effectively. I'm going to say that anyway. But yeah, it I think has really helped them. I even had one client who I really like a lot, but he was not the easiest to convince that models were really for him. And just the other day, as we were going through, I think, the third iteration of his model, he said, you know, I think I finally get it. And he said, this really does help. So anyway, with Megan's permission, I would like to share with you one of my models. And this is only for illustration purposes, but at least you can get an idea of what I'm thinking about. And so in this presentation, I want to do two things. One is to help you understand that long-term financial planning is important. And two, to introduce a tool that might help you. So with that, let me see if I can do this as seamlessly as I want to, Megan. Was that good enough?
That was very seamless, and I can see it perfectly.
Okay, good. It's always my fear. Every time I do this transition on Zoom, my fear is that I'll forget a button. But thank you very much for being patient with me. Well, this is what I've been doing with some of my clients. And I've created a model that I'm using in my academic work at Kellogg. Several years ago, when I was teaching in a doctoral program at one of the Chicago institutions, I created a series of models and course assignments, case studies, I'll finally get to the right term, to help my doctoral students understand the importance of financial management. And in that process, I created a college. How about that? I created my own college. I should have named it Jim's College, but I didn't. I called it Our College. And through Our College, we've gone through the process of planning both long-term budgets, and we've done operating budgets and so forth. And so Our College is our fictitious planning college here at Kellogg. And as you'll see in the model, we have a number of tabs at the bottom, and it gives you a number of ways of adding information to the model to try to get to the right answer. Now I'll show you what I'm talking about. The first thing that we do is we create a series of inputs. And in the model, you can see that we have planning cycle inputs, and then we've got revenue assumptions and expense assumptions and investment assumptions and so forth. So let's just look at some of these assumptions, and I'll show you how they work to drive the ultimate reports, which is the statement of financial position, the balance sheet, the statement of activities, and the cash flow statement. And in Our College, we start with the most current year. Now, the philosophy that I've used in creating the model is that we always start with the most current operating budget. So there's an assumption built into the start, and that is you have the right budget, the right process going forward. So I'm assuming that an organization has already identified the correct financial structure as they start this planning process. If they haven't, then there would be a responsibility to do some planning to be sure that you've got the financial structure of the organization set up correctly. So we start with that, and then in the illustration here, we're going to start with the 2021 operating budget. And you can see, according here, that Our College is on a fiscal year that ends on June 30th. So we're getting real close to closing our books. So I got to hurry, Megan, so I can close the books for Our College. So first of all, we're going to put in all of the information here on the balance sheet. And you'll notice that I have estimates because we haven't closed yet. So I'm estimating where I think we're going to be at 12:30. Now, had I waited a little longer, or maybe in a couple of months, I'll go back and reevaluate this. I can put in the actual numbers. And if I put in the actual numbers, then I would, of course, change this to, say, the audit. And so then all of my schedules throughout the the model would say that I'm using audited numbers, but right now I'm just using estimates. So I'm going to put in all of my balance sheet information from the best information I have available, which we know is estimates. I'll do the same with liabilities and the net asset balances. Then I will identify the operating revenues, and these are the revenues that hopefully we're going to be putting into the 21 budget. By now, we should really have the 2021 budget finished. It should be approved if we're on June 17th, and we're going to start July 1st. I would think that would be good planning. And you'll notice on the model that there are 5 years of percentages. And what this really represents is a way of taking all these revenues and making some assumptions as to the type of revenue growth we're looking for over the period of time. And I know that this is a little more complex than just having one revenue assumption, but sometimes after we do our environmental scan, or especially if we're doing a strategic plan, things may change, and we may know or anticipate things changing a year or two out. So this gives us an opportunity to make some changes with where we believe our revenue assumptions will be in the near term. And so we can put these percentages in. I just added a couple percentages just for illustration purposes. We do the same thing with expenses. So we've listed all of our expenses, and then we have percentages that we can go down the list. Now, I didn't fill this in purposely because I want to show you something a little later. And so we can, you know, if I wanted to give Megan's team a 5% increase, I could just put right in here that we're going to give them a 5% increase, and that would just take that 5% and run it right through the whole of the financial statements. So you see it in the operating budget, you'd see it in the cash budget. But Megan, I'm sorry, I got to do this. I'm going to leave you at 0 for right now, and we can talk after the webinar about your raise. I do make one exception in this methodology. I like to keep the fringe benefit ratio as a percentage of salaries, because I think I'm not convinced, after all the years I've been doing this, I'm not convinced that they always move in tandem, especially with the big bite that we have to take out of fringe benefit costs related to healthcare. So I put all my expenses in, and you'll notice that I've got a few down here. The college is going to lease a new campus, and so we've got that here. And rather than doing percentage increases, I'm going to actually put the lease in the model. And you'll notice down here I have a tab called lease. So I've got all the information on the lease built into the model. And in this particular case, I have to book $2,081,000 every year for lease expense, but my actual cash payout will vary according to the structure of the lease. And that's all structured in the model too. So we'll show the amount that we book as an expense, but then we also have to make an allowance in the cash flow statement for how much we actually spend. And there will be a differential in most years. So I've done the same thing with interest expense. I have created here an amortization schedule because we're going to borrow about $6 million to do some tenant improvements in our new lease facility at the school. So here you get a sense of what the ending balances would be each year, and I built those into the model. And we also have the interest expenses here. I should have highlighted those for you, but I didn't. I apologize. So that allows us to put actuals in. And then finally, we do the same thing with depreciation. We've created a depreciation schedule here, and we're able to show what our capital expenditures are. And this is tied to an input tab that you'll see in a moment. And it helps us to do the depreciation going out during the planning horizon. So we do all of that. We have the increases. And then one of the things that I do, which I think is so important, I also create a statement of functional expenses. Now, this may be one of the weaknesses in the model, but I have taken the 2021 or the current budget functional expenses and used that proportion throughout the model. So I have created a series of functional expense statements that show similar relationships to these two program functions as well as the support functions. And there is a tab here somewhere that shows all of the functional expense statements for the whole planning horizon of 22 through 26. And if you push that little button down, you'll see all the statements of functional expenses are built into the model. Then we are able from those, well, let's go back, there's a couple more inputs. Also, there's an input section for investments. We can estimate what we believe our total return will be. And you think about something that's hard to do right now with this market. So if you think my 6.5% is a fairy tale, that's okay, because it is. And then we can also put in how much we are going to be spending according to our spending policy of the institution. And I break this down into restricted and unrestricted investments, because often we have both in our organizations. And then I create a 3-year average, because most of our policies require us to spend on a 3-year moving average. So I put in some historical information there. And then I have some other inputs, such as a capital campaign. So if we are going to do a capital campaign, I could even estimate how much I think I'm going to get each year. And let's just say that we believe we're going to make $500,000 a year in our capital campaign. So I populate that. And then I've got a little schedule over here that shows that pledges coming in. And we know from history, generally speaking, pledges are collected over a multiple year period. And I've said in here 5 years. But then I've also allowed the model to tell us so that if we want to change that, we can change it. So if we believe we're going to collect the first year in just 1 year, then the model will show that we've collected the whole thing in the first year. So that gives us some more information. And of course, this feeds into our cash statement for the cash coming in, and it feeds into our balance sheet with the outstanding balances. So that concludes the inputs. And then with that, we can create a statement of financial position for all the years, the 5 years, including 6 years if you include the budget year. So it gives us all of our assets, our liabilities, and it continually manages the fund balances, or as we now call them, the net asset balances, for both those net assets that are without donor restriction and those that are with donor restriction. We're also able to create a statement of activities, so we can see where our revenues are, our expenses by program function, and what our net change in net assets are. Now, what happened, Megan? We got a little bit of a deficit here. Not good. We got to figure that one out. That maybe your 5% is going to evaporate. I don't know. The reason for that, obviously, if you've been following my logic here, is we're going to add a new campus. And there's a lot more expenses to having 2 campuses as one. But the good news is, over time, we're going to work our way out of it, all things being equal. But we've got that information. This is what I was mentioning a moment ago. This dynamic planning process also allows us to look at budgets going forward. So now we have a better sense of where our 22 budget may be, even though we're just on the brink of starting our 21 budget. So I think this is also very helpful. And then I've already shared with you the statement of functional expenses. This, I think, is the most important of the schedules, the cash flow. And this has been organized very similar to what you see in the audit report. We show cash coming into the organization from operating activities, from investing activities, and from financing activities. And then I've also created one for the unrestricted. And then we have the investment accounts. So we can show how much revenue we're bringing in each year from investments. We've got our 3-year average down here. And then down in this section, we can show how much money we're going to be taking out of the investments and bringing into the operating budget. Now, since we don't have, we have that deficit, we may want to start taking some money out here. You notice that both in the restricted and unrestricted, I've withheld any spending for the school at the moment. I've already shown you the capital campaign. We also have a section where we do analysis of our enrollment. We look at enrollment and we make projections as to where we're going to be going in the future, tuition and fees. So that is basically how I have learned over time to put this together, and I think it's been helpful. And I just to illustrate, and then Megan will have a little more time for questions and answers, but I thought it might be helpful to illustrate how this really works. If you look at this section here, what I've done is I've just taken the revenue and expense and net change from the statement of activities that we looked at a moment ago. And this is also, this line here is the cash, the unrestricted cash balance. As you can see, the same number there. So what I'm going to do is to suggest that if things would change, these numbers might change. So let's just go back and let's give Megan her 5% increase, because I know she really wants it. She told me that before this started. So we're going to put that, yeah, definitely. See, I told you. So we're going to put her 5% increase in, and what does that do? Well, we can very quickly see that now the deficit gets larger, but this is probably even more important, Megan. The cash goes down. So the deficits get bigger and they go out longer. And we also see that our cash starts to decrease. So by the time we give that 5% salary increase, and that's all I change is that one variable, we have a nearly $4 million variance in cash over the 6-year period. Now, is that going to happen? As I said, this is not a predictor, but it's an indicator. So at least gives us an idea that if we're going to start giving those kinds of raises, or if we have other costs to incur, we may want to look at some other changes in the organization. You know, for example, I was very conservative because of all the pressure that I know institutions are under because of tuition. And we all know what that is going on today. But if we just changed our tuition expectations by 1% a year, what would that do to this little report? Well, I hope I'm not making anyone dizzy by doing this, but I couldn't think of a faster way of getting there. Now, by just changing the tuition by 1%, you can see that we still have the deficits, but our surplus on the far end starts to get better, and our cash number certainly gets better. So anyway, just an illustration of how these financial models work. I'm going to leave you with that. And Megan, I've done all the talking, so maybe you and our colleagues could talk for a minute. More questions?
Yeah, great. Thank you so much, Jim, and thank you so much for sharing that financial model example. It is such a great example, in fact, that we have had multiple questions come from people asking how they can get access to this model. So I would love you to share what's the best way people, if they want this model as an example, should they get in contact with you? What's the best way for them to get access to that?
Yes. This is and I'm going to be very upfront. The model is part of the services that our consulting firm does offer to nonprofit organizations, and I do have some contact information on the PowerPoint, and let me just share that real quick. And if you would like, this is my contact information. You will have it in the material. Whoops, you'll have it in the material that Megan sends to you. But just contact me at jcroft@jwccg. Our firm is referred to as the JW Croft Consulting Group. I also give you my phone number. Just don't call too much after 10 o'clock because I'm usually sacked out by 10 o'clock. But call me or email me. Email is probably the best. And I have some very delightful colleagues who work with me on modeling and some other services. and we'd be more than happy to talk to you about how this might apply to your organization.
Great, thank you, Jim. Yeah, just a reminder, we will send out Jim's contact information in the follow-up email, so please feel free to get in contact with him directly should you have questions about the financial model or any other part of the presentation after this. We would love for you to be able to reach out to him directly. We definitely welcome more questions at this time, so any questions that you have throughout any part of today's webinar, please go ahead and submit them into the Q&A section on your control panel. We still have some time for questions here, so we would love to welcome those. And while we wait for that, Jim, we actually had a question earlier at the beginning when you were talking about the SWOT analysis, and I think you referenced a study, a case study that you use and you recommended. Do you mind repeating that? I know we had a question of someone asking if we could have that reference.
It's the study is it's an open system model concept, but the one that I particularly referenced was the Nadler-Tushman, Nadler-Tushman. I'll tell you what, Megan, if you like, I could send you a copy of. Now I'm going to be very frank with you. This is it's a copy. It's one of the original copies that's gone through many reprints. I mean, Xeroxing or copying, I guess it's not Xeroxing anymore, but copying. So it's a little beat up, but it's the one I use myself. It's one I share with my students. I'll be more than happy to share it with you. If anyone is interested in looking at the Nadler-Tushman, I would certainly recommend it. If that doesn't appeal to you, I can tell you that any good management textbook will have a rich section about the open systems model because it's a very important concept in management theory. So, but I'll be happy to send it to you, Megan.
Yes, if you could, and if you send it to me, we can definitely include that information in the follow-up email so everybody has access to it that was on the webinar today. So we'll be more than happy to do that.
Okay.
Thank you, Jim.
And I would like credit for putting you to sleep if you're having any insomnia, because it's an academic paper, so it will probably cause you to doze a little bit, but it's worth the effort. Just drink some more coffee.
That's great. That's great. Exactly. Thank you so much, Jim. So do you have another question that we had, if you have any advice for nonprofits just in terms of kind of emergency preparedness planning? I know you talked about it a little bit, but just in terms of the pandemic that's come up, and a lot of organizations had to do a 180 just because you can't prepare for things like that usually. So do you have any just quick advice you could give for nonprofits in terms of that?
I'm not sure I have quick, short advice, but I do have some advice. I've been working with some clients. I have one client in particular that is an international organization, and most of their operations are in the United States, and they're having some real challenges with everything that's happening throughout the world with this. And so we've been talking to a number of their operating units in not only the United States but other countries, and we've been talking about how we have to go through the various aspects of the organization and really start to look at the program. What are the critical aspects of the program that have to be done right now? What are the critical expenses that we need to incur right now? And how can we take those expenses and reduce them as much as possible without damaging the program? And then we look at the cash flow. One of the things that I've been doing with this particular organization is working on cash flow analysis. We have a tool that we've been using that helps us to look at what our cash flow projections are month by month by category. It's just basically like the statement of activity that I showed you in the model. And then we go line by line and we say we're going to need to spend money here and this month or this month, and then see how we can layer that out throughout the year. And then we look at our expected revenues and our expected expenses and see what the bottom line is. And unfortunately, the bottom line in most of the operating units in this particular organization are really ugly. And so now we have to ask ourselves, how can we make even further cuts, or what can we do? Are there are there ways in which we can go to some of our best friends? And sometimes this is a time that you go out to your best friends and ask them to help support you, especially at this time, so that you can meet the needs of people you're serving. And then if that is still not enough, then we look at possibilities of lines of credit or special grants. Many of the organizations that in this country, not in other countries, but in this country, have applied for PPP grants and have also looked at foundations that might have money available to help them. As I say, it's not an easy, quick answer, but I think it's one of those laborious processes we have to do, but we really have to really cut through and see what's the bottom line, so that we can still maintain our program as much as possible, because there's so many people in our service areas that really need the help of nonprofit organizations. And so the need has not been greater, especially in the social service area. The need has not been greater than it is today, and yet the challenges are equally as great. So, if I may just leave one thought, this is the time they really need good, qualified leaders in these organizations, like those people that are on the webinar today, to get us through some of these real choppy waters. So my apologies that I don't have a quick answer, but if I did, then we wouldn't have a problem. So.
Exactly. No, that was great, Jim. And we actually did have a couple more questions come in, so
Sure.
we want to make sure that we get to a couple of those really good questions. The first one being, would it be encouraged to utilize our auditing firm to assist in strategic or long-term financial planning?
I think that would be a good thing to do. I would try to get as much information from your auditing firm as you can. The one thing that I would be very frank with the engagement partner, and be sure that you are able to get help without incurring a large number of additional fees, because you got to be judicious about that. But to the degree that you feel it would be important in your organization to use the auditors, of course, because they're the ones who really get in. They cut through many transactions, they do the analysis, and they'd have a lot of information. And there's some good information in their work papers that could be helpful to you. So yes, I think whether you engage them to help you or not, I think it never hurts to sit down with the engagement partner or maybe the manager on your audit and really talk about your organization. What do they see? Get their observations, because many times they have very good observations from looking at our audits that could be helpful to us as leaders. And most of them do a management report. Be sure you read that, and also really pay good attention to the audit results, because we do pay for that, so we should really understand how that affects us.
Great. Thank you so much, Jim. The other question that we had come in is there a recommended model for a revenue generating hybrid social enterprise?
That's a good question. There may be. I have not seen it. And I have not had a lot of experience other than academically reading and studying about the hybrid models. But I don't know, but I think that that's certainly an area where we do need to do more research and really get to understand more how these organizations are utilizing their resources to be successful.
Yeah, great. Thank you so much, Jim. And it looks like that is all the questions that we have right now. I did want to leave kind of the last 5 minutes in case there was any more questions, but I did want to thank you so much for presenting to us today, showing us that great financial model and just giving us some really great advice in terms of long-term financial planning for organizations. I know it's really crucial, especially right now, to have a really good long-term financial plan in place. So while we wait for any more questions to come in, I will move into a little bit of a conclusion just
Sure.
so we can get any more questions in. that we have. So I wanted to thank everyone for joining us today, and thank you so much as well, Jim, again, for that great presentation. I know it was very beneficial, very good information. We do hope that you join us for future events and webinars as well. We actually have another expert speaker webinar coming up on June 24th, and that is going to be over pivoting your programs to generate revenue. So a really good topic as well, and we do hope that you'll be able to join us for that. You can get signed up on our website. It is www.jmtconsulting.com. So please go ahead and visit that and get registered for that as well. Of course, like this one, all our webinars are free, so we highly encourage that you check those out. And it looks like we still don't have any more questions, so we'll go ahead and conclude in a few minutes. But Jim, before we did, I just wanted to ask if you had any parting words for everyone before we ended the webinar today.
I'm thrilled that we've got so many concerned leaders in the nonprofit sector. And as difficult as this pandemic has been on us, not only physically, but also programmatically, my real hope is that we take this time and use some of the lessons we've learned and are still learning from the pandemic so that we can do a better job of meeting the needs of those that we serve. So that would be my parting shot. So even though it's tough, let's make it a learning experience and let's all get better from it.
Yeah, thank you so much, Jim. That's great parting words. And I just wanted to remind everyone again, if you did want to stay in contact with Jim following the webinar, we will include his contact information there. So any questions that you may have after this webinar is over, I know a lot of the times you think of a question that comes up after the hour is up and you say, darn, I wish I would have been able to ask that on the webinar. No worries, we'll include Jim's contact information so you can reach out to him directly, and I'm sure he'd love to answer your questions whenever they do come in. But I know we are really close to the top of the hour here, so we will go ahead and conclude the webinar today. But just again, I know I can't say it enough, Jim, thank you so much for being here, using our full hour today to give us great advice and answer questions for us. We really appreciate it. And we just hope that everyone is staying safe and healthy during this time, enjoying time to rest and enjoying time with your families as much as you can be during this time. So again, thank you all for coming today, and thank you, Jim, for being here. All right. Bye, everyone.